Good afternoon, ladies and gentlemen. We have a panel made up of very successful CEOs of financial institutions and banks. And they will be sharing with us their success stories. So they'll be talking about the secrets of their success, the investment opportunities that exist within their companies, and also outline how investors can participate specifically in their company's growth. My name is Albert Essien, and I work for the EcoBank Group. I need to make one correction. I don't work for EcoBank Nigeria. We have a Nigerian subsidiary, that's right, but I work for the EcoBank Transnational Incorporated, the parent company of EcoBank Nigeria. Of course, Nigeria is a big part of the group, and it's one of the biggest in the group. So I guess we all have things that make us successful as an institution. And for a finance services company, some of the attributes could be your people. You want to be an employer of choice. Some of the attributes could be the process, that is process and systems that actually forms the foundation of that particular institution. Now, some of the issues will be the products and services, passion, perseverance, and the rest. Now, this is what has actually been the cornerstone of EcoBank. And without much ado, I would want to introduce my panel of CEOs, starting from my immediate left, Mr. Bob Diamond. I don't think any of them needs an introduction. Mr. Bob Diamond is with Atlas Mara, making a lot of waves throughout Africa. We have Simon Donu. Simon Donu is with the Ghana Commercial Bank. I think he wants to tout himself that is the biggest bank, although I think there is a bank that starts with E. Okay? Yes, I think he just rebranded and it's GCB Bank, not Ghana Commercial Bank again. Thanks for the correction. And like I said, they want to tout themselves as the biggest. We will hear their success story. Then we have Carl Bank, Frank Edu from Carl Bank, also from Ghana. Will tell you more about what they've been doing there. Then we have Mr. Rafiq Bengali from UBA. He's GM UBA based in New York here. So he'll also be talking about UBA. They tend to call themselves Africa's Global Bank. Then finally, okay, I thought that we were having okay here. He's not here. So I will start straight away with Mr. Bob Diamond to actually share his thoughts with us on the secrets that have made them successful so far. Bob.
Thank you, Albert. This is on. Good. Excuse me. So I was here at this lunch last year, and I think what's interesting and probably the most important lesson, if I just take a few minutes to give you some background, as I sat here at this lunch watching the heads of state, I had meetings during the summer with Ashish Thakkar, my partner in Atlas Mara, but we had not yet decided to begin Atlas Mara. In fact, we had only had very general conversations about the opportunities that Africa presented, the opportunities that financial services presented, the potential for a kind of a global banker who has African experience, such as myself, and an African entrepreneur, such as Ashish, to combine. But I think what was interesting is that 12 months ago, we had absolutely no business plan. Beginning in November, we made a decision that the single best investment opportunity for Atlas Merchant Capital, which is the firm that I started having left Barclays, was in not just investing in financial services in Africa, but looking at it differently, looking at it as acquiring, investing, running, organic growth, serial acquisition. The opportunity was really one that could combine the beta of the incredible story about the potential of Africa with the alpha of truly being an operator. So we made that decision in November, and scratching our heads of how to execute on that, the single biggest issue facing us was, what is the right funding model? And clearly, if one has the idea of running a bank, building a bank, acquiring a bank, integrating a bank, organic growth, and running it, then the traditional funding sources, such as private equity, just don't fit that model. Private equity has a time frame to it. LPs are going to eventually want their money back. But it also lends itself best to a more diverse set of passive investments, as opposed to what we wanted to do, which is a very, very, very concentrated and integrated series of investments that ended up in a single institution. So it lent itself much more to permanent equity. We had heard of the SPAC market, the Special Purpose Acquisition Corporations, but it had never been used for a financial services company, and it had never been used in Africa. But to put the timing in place, on December 19th, we raised $325 million in equity on the London Stock Exchange, on the big board, in what is called a SPAC. I don't like the name, but that's exactly what we were. A special purpose acquisition vehicle with $325 million in the bank, earning 0.1% until we could do something with it. In March, we announced the acquisition of Bank ABC, which I will tell you, if you ever have a chance to do this, don't start with the single most complicated transaction in the world. It was 40 to 45% owned. It was hard to tell by a publicly listed German private equity firm. There was an ownership of the shareholders, but most importantly, it had regulators in 6 countries across Africa. Our ideal beginning was a multi-country institution, but this was a very, very complex transaction given the ownership structure and given the number of countries where regulatory approval was necessary. Soon after that, we announced the acquisition of the Development Bank of Rwanda. And on those announcements, because we were a SPAC, and again, this is March, our shares froze. And your shares freeze because you're a special purpose vehicle announcing an acquisition. You have to relist with the regulatory authorities in the UK with a new prospectus laying out the banks that you're acquiring. So this was a key. We took the opportunity, since the shares were frozen, to keep them frozen a little bit longer than they probably needed to be, so we could supply the prospectus, the new prospectus, to the UK LA, but at the same time raise more funds. We raised $300 million more in equity and $200 in a committed debt facility, so we could execute on the next phase, which we hope to be Nigeria. But also to close Bank ABC before we reopened, so when we reopened for trading, we would never again be a SPAC, we'd be an operating company. Now, one of the things that was, I think, a tremendous success of this, and one of the lessons learned, which I'll review in a second, was that by August, again, the announcement of Bank ABC was March, by August, we had regulatory approval to close on Bank ABC, which meant we had the approval of regulators in 6 different countries, plus the approval to unwind the public listing of the private equity firm in Germany. And if ever there was a testament to the pro-business nature of so many different countries in sub-Saharan Africa, it was the speed with which we were able to get regulatory approval, going through, of course, a complex and rigorous process. So at the end of August, we reopened for trading as an operating company. Atlas Mara today is a bank, not a SPAC, and we announced soon after that the acquisition or the execution of an option with AMCON that will give us close to 30% share in the Union Bank of Nigeria. So that's where we stand today. Our vision is both very, very simple but very, very bold. We want to create, through multiple acquisitions, through organic growth, through integration. This will sound arrogant as hell to my colleagues, because our ambition is to, through that process, build the leading financial institution in sub-Saharan Africa. And you can see part of the challenge sitting right around me here, because these guys represent some of the best banks in Africa. But I think having a vision that clear is important, and a vision that bold is important. So very quickly, what were the lessons learned over the last year? There were 6 lessons that I would ask you to think about that we learned during this process. Lesson 1, clarity of vision. If you don't know exactly what you want to do, you're not going to know what to do in terms of funding or in terms of an organization structure. We have a really, really good team in place, and we had to have them in place early, and we had to have the funding in place in order to execute on this. Neither the talent would have joined, nor would we have had the right funding structure if we weren't as clear on our vision, which is to create one integrated financial institution in sub-Saharan Africa. It's very, very different than just a passive investment in financial services. The second lesson, and this goes against what I read all the time and it drives me crazy, there is plenty of talent in Africa. Talent flows. Once we announced this, we were inundated with people that wanted to join Atlas Mara. Barbara Ayaya, I pick on Barbara, I apologize. She's late 20s, Nigerian, Harvard undergrad, Harvard Business School, great career at JP Morgan in New York, and as soon as we announced this, she saw this as an opportunity to go back to Nigeria and be part of something with vision, where she would work her tail off, but the professional rewards of being that challenged in the opportunity she really wanted, which was to be a part of banking in Nigeria, was there. I could go on and on and on. Yurki Caskello, 30 years at the IFC. He has done every major investment in African banks for the IFC for the last 20 years. Joined immediately because of the opportunity to do these acquisitions. John Vitalo from Barclays, someone I had worked with for 20 years in various positions, the last 10 of which in Africa and the Middle East. Talent flows. The diaspora and people on the continent. I'll tell you, one of the things we don't worry about is talented people. There are so many talented people looking for the right opportunity. We have it backwards. The real thing is to provide the right opportunity for the amount of talent. The third lesson I would tell you is, if you can be an operator, be an operator. There is a passive investment opportunity in Africa. It's wonderful. You all know the story or you wouldn't be here. But what Africa needs, so many of the countries, certainly financial services, and these guys will need more than anything, is execution, execution, execution. They need people willing to roll their sleeves up and really run businesses. The fourth lesson, and maybe I'll get booted out for saying it, but it's what I really believe and what I really learned. Sub-Saharan Africa is not simple. It's not one culture. It's not one country. This isn't China. It's 46 countries. But I think that also goes too far. It's emerging as a number of critical trading blocks. To achieve our ambition, we don't have to be all things to all people. We don't have to be in every country. I think even EcoBank would say today, much different than 15 or 20 years ago when they expanded, you don't have to be in every country. The East African community is incredible. Some of the banks in Kenya in the East African community are so good they trade at multiples I'll never pay. So the opportunity to start by building 1 or 2 banks and building the technology in Rwanda or Uganda and build through the East African community is an opportunity. One doesn't have to start in a country such as where banking has already had the investment and been developed. So while it's 46 countries, it's also very, very important trading blocks are growing. The fifth one is technology. If there's something that all of us can bring, it's technology. You know, we've seen in Peso, which is phenomenal, over 50% of money transactions that happen on mobile phone in the world every day, over 50% come from Kenya. But what we really need is a backbone, regulated financial services business so that we have mobile financing. And it takes banks to invest in that along with telecom countries. But it's also the intelligent layer of technology. If all of us are going to have banks across border in multiple countries, we have to have single client credit risk exposure at our fingertips. We have to have 24/7 currency risk at our fingertips so that we can make more effective business decisions. So technology will be our single most important investment. And then lastly, the sixth lesson learned in my point is the heads of state and the regulators are so pro-business that a lot of the myths about this not being pro-business are way ahead of themselves. The ability for us to invest, get regulatory approval, get approval for investing further, doing further acquisitions and integrating. If you think about the speed with which we got regulatory approval for Bank ABC, it's because the heads of state recognize the importance of being open to investment, open to private enterprise, open to execution. Thank you.
Thank you very much, Bob. Good. So we've listened to Bob, and he's actually given us food for thought. 6 points that we should always be thinking through: vision, talent, execution. Sub-Saharan Africa is not for the faint-hearted. It's not that simple. Technology, very key. And finally, the regulators and the governments are pro-business. Thank you very much, Bob. We move on straight to Simon of GCB Bank, Ghana. Simon.
Thank you very much, Albert. And for GCB, I think the story is a bit different. It's a turnaround story and a transformation agenda as well, a transformation journey. Turnaround because 4 years ago, this institution actually used to make about $10 million profit. And today, the institution, after 4 years, is delivering almost $150 million US dollars profit, with a market cap almost about 5 times what it was 4 years ago. And a transformation agenda because today, we have, just about a week ago, rebranded this bank to represent what we think the business is looking like today and to reflect our new strategies as well as our new brand promise going forward. It used to be a 100% state-owned bank, but technically right now it's a JV between the private sector and the government. And we're reflecting that in the way we actually conduct our business. Looking at how far we've come over the last 4 years, it's been, everything is changing. Everything we're doing is changing. Our products and services, aided by investment in technology. Our people agenda is also changing. The way we actually reflect ourselves, corporate identity, the way we interact with our customers, everything is changing. And it's very interesting that as we speak today, and in Ghana, the business is leveraging its franchise, a very strong franchise, as one of the largest banks in Ghana, if not the most extensive bank right across the country today. We have learned quite a number of lessons in doing this change. That we're building on the institutional framework. The institutional framework, for me, is key. We've had a situation where, over the last 60 years, when this business was a government-run business, we never actually built an institutional framework to ensure that we managed the business on an ongoing basis. Today, we've invested heavily in governance and in risk management systems. We're hiring the right people, which is key. We're focusing on value creation. Our management principles have changed. Our philosophy has changed. We're not being all things to all men. We see that as very important because investors around this room are asking for a return on investment. So everything we're doing is aimed at delivering a return on investments ahead of our hurdle rates. When I talk to you all the time, I want to find out what your expectations as far as returns are concerned, and we take that into consideration. And I think our engagement with the stakeholders has improved. Government is playing its part. They understand where we're coming from. We're engaging a lot the private sector, who have invested in the business. Our customers as well. We have invested massively in technology. I mentioned that earlier on. We have grown our consumer banking business. I think now, as we speak, we have the largest consumer bank in Ghana. We have, through our investments that we've made, we've migrated a lot of our customers from manual channels or branch-to-branch channels to electronic channels. 4 years ago, we were doing under 100,000 transactions. Today, we are doing over 1.5 million transactions on a monthly basis. In other words, electronic transactions through ATMs. And we want to continue doing that. There is massive opportunity. 24 million people, about 50% of them are bankable. And currently, I know the banking sector is doing less than 25%. So there's a lot of opportunities to actually expand in that space. So everything we're doing is we're trying to build a template in Ghana, consolidate our positions in the market before we start thinking about expansion, geographic expansion, because that's also offers us great opportunities for revenue. You may have been looking at our performance over the last years. Bumpy, the volatility was great, but the diversification of our portfolio into the retail business, corporate business, transaction banking business has helped a lot to stabilize our business, and we want to continue in that space. We are investing heavily in the cards business. We are the #1 issuer at the moment in the country. We're building an acquiring business as well. So that's the next phase of our development as far as the cards business is concerned. And we will very soon be launching our mobile point of sale business, which is just about to take off in the Ghanaian market. The point of sale business is a big one in Ghana. It hasn't yet started, but I think with the regulators thinking about promoting a cash-light economy, that perfectly fits in very well with this strategy of advancing our mobile technology and card business as well. So generally, for us, the big lessons there, for me, if you ask me to just summarize that, we need to continue building institutional capacity. We need to continue to invest in the right people. That has made a big difference. We have people coming from different banks, international banks working with us at the moment at various leadership levels. It's helped a lot to provide the direction that we needed in all the different critical areas of our business. And we are complementing that with building or creating a competitive internal labor market in the bank so that people compete for jobs, which was lacking in the past. So that has really worked. We're getting the right people coming up and showing what they can do to move this business forward. And the management philosophy of creating value and focusing on value creation is one thing we stand by, and we want to continue doing that. And just a sheer tenacity of purpose. We are all singing from the same sheet, and that clearly, there's a clear line of sight between the board, the management, and everybody. So that basically has been what we've done so far, and I think it's worked very well for us if you look at the results that we've actually delivered so far. Thank you very much.
Thank you very much, Simon. So Simon's story, GCB, it's a turnaround one, where they're largely successful because of a change in mind shift, especially management philosophy, and also putting in place an institutional framework that actually drove the business. And behind all that is technology and e-banking. Now let's listen to my friend Frank Edu of Carl Bank too, also from Ghana.
Thank you, Albert. Thank you, everybody. Carl Bank. Carl is a privately held, well, it's a private bank. It's listed on the stock exchange. It's got about 24,000 shareholders. In terms of size, it's probably the 8th out of 28 banks. In terms of profitability, it's the 5th out of 28 banks. We are basically known to punch above our weight. We're a leading bank for syndications, and we have significant medium-term loan exposure, which is what our strategy is. Half year, June 2014 results, basically return on assets of average 6%, return on equity of about 40%. cost-to-income ratio below 35%, and a PE ratio of less than 4. So basically, it's a highly profitable bank. Now, in terms of what has made us this successful, we basically follow what we call the 5 Ps. We have 5 Ps, which are presence, products, processes, people, and profits. We are unashamedly opportunistic, and we are profitability driven. So basically what we've done is that we've made sure that we know our markets and we stick to what we do best. In times when we've tried to raise capital, we've had potential investors come and tell us, but why aren't you doing retail banking? Or why isn't your retail banking book that big? That is not our forte. We leave that to Ghana Commercial Bank.
GCB.
Sorry, we leave that to GCB Bank. We'll focus on corporate banking, and we'll grow our retail book slowly, measuredly, because that retail space in Ghana is dangerous, or can be dangerous. So we know our market, and we stick to what we know, and we stick to what we do best. Then we also embrace very strong risk management, which is basically our processes. So credit risk, market risk, operational risk, we take very seriously, and we make sure that before we came here, we're having this discussion between the CEO of Ghana International Bank and Albert ACN, and we're very, very prudent when it comes, and aggressive when it comes to provisioning. We're consultative in vision and strategy, basically people. So we involve the team. Every 3 years, we take all members of management. We wake up early in the morning and we take a 5-kilometer hike up a hill, and we go sit in some place, we have breakfast, and then we talk about the bank for about 4 hours. We agree what we are going to do for the next 3 years, and we come, and basically it's a goal for all of us to achieve. So the strategic process is very consultative. It involves a whole team, and it's generally a teamwork. We have 600 odd workers in that bank, 20 branches, but 5th in profitability. Profit per, I think only EcoBank makes more profit per capita than Cal Bank in that market. And I'll grant it to EcoBank, the highly profitable bank. We also seek out the right team players. You know, I probably am the 3rd oldest person in the bank. And I don't count myself as being old. I like to think that I'm 38, but really I'm over 50.
Aren't you?
But the average head of department in that bank is about 40 years old. And we're also very representative of gender. We have more women working in the bank than men. And I find out that women work better for me than men. You know, men compete with me. I guess women just love me. So I came with 2 women colleagues, 2 female colleagues. So our board members, our managers, our staff, very engaged, very carefully selected, and very, very hardworking. And I have a saying that they do the work and I take the credit. Because indeed, that's what happens. My staff do the work. I really don't do much. And then there's always constant communication. Trust me, we communicate, particularly with our shareholders, external stakeholders, and internal stakeholders as well. So at any point in time, everybody knows what is going on. What investment opportunities exist in Cal? Well, we're a listed company. We've programmed to raise more equity in 2015. And I've been talking about that in the one-on-one meetings. We'll probably raise between 30 to 70 million US dollars next year, depending on how things shape out. So for those of you who are interested in investing in Africa, I think the best place to look to is Ghana. My president was here talking to you about the country, and you can see he's a very switched-on president. So if you're looking to invest, that opportunity exists in Cal Bank. That number I talk about could easily increase because we could also target, there are 28 banks for 25 million people. And I think that there's opportunity for some form of consolidation so that we can approach the size of GCB Bank and EcoBank and bring our skill sets to make more money than them as we approach this, their size. So we probably would be in the market for, and this is the first time I'm saying this publicly, for a merger or an acquisition, and so that investment opportunity also exists. Now, how can investors participate specifically in CalBank's growth? One of two ways. You would either invest in the bank and grow with us, or co-invest with us in other areas in the economy, which I think the president talked about, because there's a lot of things to be done, and we can lead the way for those of you who want to invest directly or co-invest with us. Power plants, construction, upstream oil and gas, etc. So basically, that's CalBank for you. And so the secret of our success really is based on the 5 Ps, particularly the people, because they do the work and I get to take the credit. Thank you very much.
Thank you very much, Frank. I think Frank has clearly espoused their secret for success. That is by avoiding the dangerous path that is retail bank, but by making sure that they have gender and youth balance, and also going by the 5 Ps. The last but not the least is Rafiq. Rafiq works for UBA. Rafiq.
Yeah, thank you. If I didn't know any better, I would have said that Bob Diamond looked at our history and has learned the lessons of what to be looking out for. So, as with any successful organization, there are some key ingredients, and I think a lot of them were mentioned by my colleagues at the table, all right, which makes it successful. 1, visionary leadership. 2, people. 3, core values. And then, of course, comes the strategy and execution. Right? We have visionary leadership provided by the bank's chairman, Mr. Tony Elumelu. Right? He, in 2005, as MD and CEO, championed the biggest and the most successful bank merger in Africa. He then went on to attract the best talent in the industry, such as CEO Philip Soduzo and the rest of the executive management team. So that's how we started. Talking about people, people are the most valuable assets, and UBA's competitive edge in a highly dynamic banking environment. We have multilingual, multicultural, multi-diversified, in outlook, reflecting UBA's richness and diversity. Then, third point, as I said, for success, core values. UBA prides itself with a corporate culture built on the following core values over the years: humility, empathy, integrity, resilience. I like that sound, it spells air, H-E-I-R, so that we all are heirs to the bank, all right? But we have to work very hard, for that. I have talked about the success. Then the question was, what investment opportunities exist within your company? Well, UBA sits at the center of Nigerian and African opportunity. There are numerous opportunities in UBA as we continue journey in pursuit of industry leadership in the regions UBA operates. And of course, we have very good competitors like the people that you see over here on the panel. We are open to partnership with different financial institutions and firms that share a common passion to play a leading role, driving growth and development in Africa. There's opportunities in infrastructure, power, oil and gas, agriculture, all areas that are very important to us. And we would be more than happy to partnership with the firms. It depends on the firm's choice, what kind of firms. There are financial firms or just companies coming in for technology transfers. So we are open to that, all those areas. To outline how investors can participate, as my colleagues have said before, there's equity investment. We do have a GDR program, right? So acquire UBA shares, administered by Mellon. The GDR program is administered by Bank of New York Mellon, denominated in US dollars. So, you can participate in the growth opportunities that exist in Africa. Not to say the least, a recent McKinsey report says lions on the move. It talks about Africa GDP to reach 2.6 trillion in 2020. That's the equivalence of size of UK. Consumer spending is expected 1.4 trillion in 2030. There are 1.1 billion Africans of working age going to be in 2040. Increasing life expectancy, increasing urbanization. I think these are all great opportunities that I think everybody should be excited about, as we are. Thank you very much.
Thank you very much, Rafiq. I think I've been told that we have just about 10 minutes for Q&A. So let's be quick about that. Yes. The lady first, though.
Thank you. This was an excellent panel. My name is Donna Sims Wilson, and I am the new president of Smith Graham and Company. We are a $6 billion African-American-owned investment management firm headquartered here in the United States. My question has to do with the diaspora. All of your institutions have been very successful in your representative countries, but I'm wondering what strategies and processes are you working on to be able to provide capital flows and bank the diaspora, Africans living in the US and Europe, et cetera, and working with them, with your institutions, and also how might you work with American-owned institutions to do that? Thank you.
Thank you. Let's take the second question, then we'll answer both. Yeah.
Great. Thank you.
Yes,
My
go
name
ahead.
is Graham Sinclair, principal of Cinco. My question goes to valuation and the opportunity in financial services in Africa. I'm a big fan of evidence-based research. Some of the best research I've seen is the Rescura Bright Africa report, which does focus on private equity investment in Africa, but also references the opportunity in the listed space. One of the key data points coming out of that report this year is that 60% of exposure in listed exchanges is to financial services. So it's quite clear why Mr. Diamond, for example, has a growth business for the next decade at least. But my question goes to a question of valuation. We know when it comes to banking, we've got issues of corporate governance, we've got issues of compliance, but potentially fraud, as in any market, right? Not specific to Africa. So I'm wondering how well each of the panelists sleep at night and how precise and comfortable they are with the valuations of their core business today, and perhaps where they have activities in growing the different units of their business, or indeed acquiring other businesses in other regions. Thank you.
Thank you. I think I want us to address the two questions, and I don't know, any of us should pick it up. One is on diaspora, how we are attracting capital flows and business interaction. And the next one is valuation of financial institutions. Anybody can take a go. Yeah, Simon, go ahead.
Let me just clarify the question. Can you clarify that valuation in terms of what? Are you saying that the risks that you perceive in terms of fraud risk, operational risk, and the impact on valuation, are we taking that into account? Is that it?
Yeah, and especially when you come to financial services, because the opportunity for the numbers to have a fudge factor or for something to go badly pear-shaped in a particular situation are going to be much greater than, for example, where you have hardware or capital goods that you can kind of inspect and kick the tires of.
Okay.
Go ahead.
Let me take it from the regulatory standards in Africa, and maybe let me speak specifically for Ghana, changing very rapidly and improving. There are standards when it comes to issues that deal with fraud, AML risk, KYC risk. All those things are very, very high on the agenda as we speak today. and banks are having to comply with those standards, world-class standards. Some banks, and for GCB, for example, and maybe the other banks, we're all driving towards international standards. There's the implementation of the Basel principles and all that. So that generally is promoting some convergence in terms of the regulatory environment, and is helping in terms of making sure that we are adequately capitalized and to mitigate those risks. I think that over time, and the fact that we are very much interconnected with the global economy, and all these stories that are coming out about maybe compliance risks and conduct risk and all those issues are relevant to Africa, and we're paying attention to all those in terms of how we analyze our business and how we provide for those, and of course the impact evaluation as well. I don't know whether I have done justice to that question.
Let me,
thanks.
if I can add to that, I think, the evidence, to your point, would suggest that you wouldn't have an AMCON in the financial crisis if there weren't some issues. On the other hand, was that a market move or was it historic? All fair. But I think our experience in doing due diligence on Bank ABC and Development Bank of Rwanda, we're a little bit fearful going into that. We probably spent more money on due diligence, particularly in areas like Zimbabwe, particularly being an American, than normally would have been done in a developed economy. We took, I think it was around 20 million in additional provisions before we closed, which frankly for a bank that size is fairly expected, I would think. I'd be surprised if there wasn't something on an acquisition like that. I think the types of issues that we faced tended to be around where you would guess, single name, large credit exposures. And I would also keep in mind the business model. So there are many banking institutions, the smaller, more domestic ones, where because of the particularly high interest rates in many of the countries, the business model has been prone to be deposit taking and local T-bills. So there's been, as we all know, too little consumer lending and too little business lending. So I don't know if you guys would add to it, but I think we came out of it pleased in terms of things like, we didn't find corruption, we didn't find issues that we had to go back to our board on and say these deals aren't doable. We certainly found what you would expect in terms of, some credit issues, some, tax deferred things, small things, but it didn't add up to more than we would have expected. We're pretty pleased in the end of it.
Good, Frank, can you take on the issue of diaspora?
Yeah, okay, thank you, Albert. I remember I sent 2 people to the US. There's a group in Ghana which has actually been granted diplomatic status called AUDAF, American something, Diaspora Association of something. And basically what we had done was we had sponsored a 36 apartment block and targeted it at the Ghanaian diaspora in the US. That is the reverse. What you're talking about is how to harness the resources of not just Africans, but African Americans out here in the US who control a lot of funds to invest these funds in Africa. I think it's a brilliant idea, and some countries, including Ghana, I think have attempted it. The thing is for us to find the mechanism to make it possible to do that. I would imagine that right now it's still possible, but because of FATCA, yeah, are you familiar with FATCA? Okay, because you live in the US. Right now, every American living outside of the US, if you bank with, your bank has become an agent, whether they like it or not, of the US IRS. So we're supposed to tax you if you're liable to tax and send it to them. Or the first stage is to report the fact that, yes, you exist in the economy and you bank with me and this is your income that you put in. So that if you under-declare in the US, they'll deal with you. Otherwise, then I become an agent, and whether you like it or not, I will tax you for the US government, something like that. So that makes, that provides a certain, because already the Americans we deal with in Ghana are quite upset with FATCA. But yes, the diaspora bond is something that can be explored, and I think it's a very good way of mobilizing resources for investment in Africa.
Thank you very much, Frank.
May I just, Mr. Chairman, just address this?
Oh, you want to add something?
I have seen this with various, I've had the fortunate instance of working for banks from various countries, Pakistan, Middle East, and others. And this question always comes up, you know, how do we get the investments from the diaspora to invest in our own countries? I think the only country that I know of that has successfully done that is India, you know, through the non-resident Indian NRI deposit that they have talked about. But I can tell you it's a very difficult venture, because as soon as you step into doing something on a retail basis or investment basis with people from any country, you get exposed to a whole lot of compliance risk in USA. So yeah, FATCA is just one, but there's a whole lot of other rules that come into play. And you really have to be a big retail bank over here to do that. But there's nothing stopping us from looking at models like the Indian government and Indian banks have done, and partner up with some American banks and to be able to do that.
Good.
FATCA is Foreign Accounts Tax Compliance Act.
That's the actual name. If you, at one of the conferences they said FATCA stands for Foreign Assistance to Compensate America. I don't know, you know.
Thank you very much. Thank you very much.
Remember, Big Brother's listening.
I think that on that note, unfortunately, we have to bring this very interesting panel discussion to a close. Thanks to Bob, Simon, Frank, and to Rafiq. Thanks also to the audience. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.